Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
Hello, and I'm Yatin Mota.
Well, another choppy day, Yatin. After a roller coaster of a week last week, we started the week on a very choppy note.
Right.
In fact, the Nifty was hovering in a range, Yatin, but at the start, we managed to reclaim that 22,500 mark. But, we failed to hold on to that. In fact, we've also broken below that 20-day moving average of 22,554 or something like that. We have 454 rather. We've broken below that level as well. The breadth was extremely poor, Yatin. NSE advanced decline ratio was almost in the ratio of 1:3. Broader markets were also under pressure. In fact, broader markets were underperforming. If you look at the Nifty small cap index, that was down over 1.5%. Bank Nifty also under pressure, but of course the Nifty PSU bank, that was the big laggard today. Almost 4% cut coming in on the Nifty PSU bank index. Aside of that, if you look at some of the defensives, they were doing well. There was buying emerging in one of the sectoral underperformers of last week, IT. That saw some buying. Realty was a clear outperformer today, over 2% gain coming in on that index. FMCG was also buoyant thanks to strong volume growth by Britannia. FMCG index was holding out, and pharma also doing well. In fact, if you look at the individual movers today in terms of gainers, Britannia, Kotak Mahindra Bank, TCS, HUL, M&M, Sun Pharma, these were some of the names that were on the gaining end. On the flip side, Titan, on the back of subdued performance in the fourth quarter, top laggard. I think it was the worst day for Titan in the last 4 years since 2020. BPCL, Coal India, SBI, NTPC, Adani Ports, these were some of the other laggards. But Yatin, we had quite a few movers, especially the NBFC lot, the likes of PFC, REC, after hitting fresh highs last week. We saw quite a bit of pressure today. What was the reason behind that? And Godrej Properties, good guidance. So we saw that stock emerge as the top Nifty 500 gainer.
Correct. We'll talk in brief about REC, PFC, and then RBI, draft regulations. But as Nandita was mentioning, choppy day. In fact, the markets were almost flat, if I may say so. But the small cap index was down 1.5%. The PSU index, especially the PSU bank index was down 4%. So the selling really in the markets was in the PSU stocks, PSU banks, PSU NBFCs, and a lot of these small cap stocks. Let's talk about Nifty 500, Godrej Properties. After giving a stellar FY25 guidance, we had an upgrade coming in and overall buy rating coming in for a lot of brokerages, including JP Morgan. That stock ended up 10% higher. We had EPL, Brigade Enterprises, Rainbow. All of these stocks are moving in trade. What is not doing well is MRPL. After the earnings, that stock fell 9%. PFC, REC, obviously they were down nearly 7-8%. Titan, they continue to disappoint on the jewelry business when it comes to the margins. And the outlook also has been slightly bleaker for FY25, and hence that stock was down 7%. PNB also bearing the brunt, down nearly 6.5%. And so quite disappointing day for PSUs, with the SBI also impacting the Nifty Bank when the stock was down nearly 3%.
Right. I think SBI reports its numbers also this week, Yatin, so that stock will be in focus. But on that note, let's take a look at the stocks that are on our radar this afternoon. Of course, starting with Titan, the worst drop since 2020. Q4 margins have disappointed, as Yatin was pointing out. The jewelry margins have disappointed, but management has said that they saw a lot of competition, and because of the intense competition, you saw the margins come under pressure. 9.9% vis-a-vis expectations of north of 11%. Management, however, has said that the less than 1 lakh rupee category is something that saw intense competition, but they have said that they are on track to maintain market share of 10% by FY27. And management has also said that for jewelry business, margin will be closer to 12 to 13% for the next 1 to 2 years. Brokerages, well, most of them have retained their buy and hold calls on the stock. They are of the view that you should buy this particular stock on dips. Revenue growth was strong, but competitive intensity and higher gold prices or volatile gold prices weighed in on the margins. Because in times when gold prices are higher, demand typically gets impacted, and which is what has played out for Titan as well. Margin headwinds for the jewelry business are expected to continue in the near term. Most of the brokerages have this view, but some of the brokerages are also happy with the fact that the company is focusing so much on market share and revenues, even at the expense of margin. for FY25, as Yatin was saying, the management guidance is a little bleak, but UBS has said that higher discounts and offers have also impacted margins, and the demand environment is likely to remain weak in the near term. Jefferies also has a hold call, target price of 3,500. It believes that stock may remain range bound in the near term, but the key event to watch out for in terms of Titan would be the analyst meet at the end of the month. But Nuvama has downgraded the stock to hold, revised target price at 3,867 vis-a-vis 4,100. Of course, it has cited the weakness in margins and has cut the FY25, FY26 PAT estimate by 6%. Kotak has in fact said that keep an eye on how lab grown diamonds get adopted in India. That adoption is the key to watch, and also the fact that Aditya Birla Group's upcoming jewelry foray could intensify competition. So that's something that one needs to keep in mind. For Motilal Oswal is one of the brokerages that says that company's aggression in its growth outlook and new store additions, attractive designs, market share gains, the focus in all these areas bodes well according to Motilal Oswal. And of course also the fact that Titan is entering new markets, overseas market. It has recently entered Singapore. It is looking to expand in US and Middle East, and all these overseas market, all these overseas overseas market is doing well for the company. So that's one thing to watch out for. So all in all, of course the outlook for the near term may be subdued, but longer term analysts say that look at buying this stock on dips.
Absolutely, and we'll watch out for that. But clearly what is dipping in trade today was REC and PFC. Remember last week both of these stocks were the top F&O weekly gainers, and this week we saw nearly an intraday fall of 10%. Why the fall in REC PFC is primarily because of the RBI draft circular on infrastructure finance. Now the RBI in its draft regulation has said that the infrastructure lending companies, banks or NBFCs would have to do additional 5% provisioning for ongoing infrastructure projects. Now if you do additional provisioning of 5%, it impacts two things. Number one is because of higher provisioning, there is a profit and loss impact, which means your profits reduce, and also because you're doing higher provisions, and on the past loans you will have to take a hit on your capital adequacy ratio. That again in turn impacts your book value. Now brokerages believe that the RBI draft regulations will impact PSU banks on a higher side versus private banks, because most of the PSU banks lead infrastructure project financing, and also companies like REC PFC would see an impact. CLSA believes, however, that REC PFC would see a limited impact on P&L accounts since they already follow Ind AS accounting standard, which provides for higher provisioning. On the other hand, the IFL Security believes that the PSU banking lot could get impacted when the circular comes in effect, because of higher provisioning. Their overall book value get impacted up to 3% of the estimated book value in the future. However, for REC and PFC, this impact could be more than 6 to 7% of overall book value, because it won't impact the P&L, but yes, they would get impacted because of the overall provisioning that would get required to pass through the balance sheet, which impacts the book value. Hence we saw a big dip coming in for both REC and PFC, because probably the market expects some bit of decline in the overall book value when the circular comes into effect. Obviously this is a draft regulation, number one, needs approval, and number three, that the 5% provisioning that I'm talking about would have to be done by FY27 in various phased manners. So it is not that from day one it happens at 5%. But yes, in general, today there was a profit-taking mood in most of these PSU stocks.
Right, and of course, particularly for PFC, REC, they had hit fresh highs recently. Of course, this came as a negative, news and setback for these companies. Of course, as Yatin mentioned, these are just draft regulations, and brokerages maintaining that profitability won't be hit, but valuations and capital adequacy ratio may get impacted. So these are some of the stocks that we will be of course watching out for as to how they pan out going forward. But the other stock on my list is another Tata Group stock, Tata Technologies, which listed amid a lot of fanfare. We saw the stock hit 1400 as well, good premium, but of course subdued numbers have taken the sheen off Tata Tech. Of course, also the fact that EV adoption globally has been slow, and clients globally have been cutting down on spends, which is what happened in the fourth quarter. Vietnamese OEM VinFast has ramped down some of its spends, and which is what impacted earnings for Tata Tech. Profit was down 27%, revenue from operations was down somewhere around 7%, but services business fell by 1% on a QOQ basis in constant currency terms, but ex VinFast services business grew by 10% QOQ, which is a pretty good growth if you see. But this impact of VinFast, which was felt in the fourth quarter, is expected to continue in the first quarter as well, which is why I think the stock saw 5% cut intraday, but ended lower by about 4% or thereabouts. There's a bear case and a bull case emerging for this Tata Group stock after its numbers. Kotak Institutional, it has cut its FY25 to FY27 EPS by 1 to 2% on higher than expected drag from VinFast, although it has said that it has been marginally higher than expected, but still it has led the brokerage to cut its EPS. It has a sell rating, target price of 700. It's cautious amid expensive valuations. Ambit as well continues in fact, Ambit as well has a sell rating, target price of 770. It says that high client dependency on Tata Motors and JLR could be a risk. Also, slowing investments, with respect to EVs globally could be a potential risk. But there are a couple of brokerages that are still bullish on the stock, including BofA. It says that there is a solid breadth of growth, and that may reaccelerate in this current fiscal. And the pace of EV adoption is decent. It believes that it's not a major concern for the company, and FY25 prospects are likely to drive stock returns. JM Financial has said that BMW and aerospace deals will add further impetus. In fact, Yatin want to also mention that the company has closed as many as 12 large deals, one in excess of $50 million, and there has been one from the Telangana government also, somewhere around $25 million or thereabouts. So deal momentum is strong, which even the management has highlighted. JM Financial has raised the target price to 1410 vis-a-vis 1370 earlier with a buy rating, but all of these brokerages have maintained that the valuations at 44 times FY26 earnings remains a little stretched, but from listing price, I think the stock is down 13%.
Correct, and in general, I think the kind of fanfare Tata Tech got during the IPO, that couldn't converge into numbers, and Nandita, the high of 1400, the stock has been in a range of 950, 1050, and I think results have disappointed equally, with the stock falling by nearly 4% other quarterly numbers.
Well, then those were all the stocks on our radar this afternoon. Of course, it was an extremely choppy day. We'll see whether or not the volatility continues tomorrow as well, given the fact that India VIX, Yatin, was up another 14%. I think in the last 7 sessions, India VIX is up somewhere around 50%. So that's the kind of volatility we are witnessing at highs. But of course, with that, we've come to the end of this edition of Closing Bell. From me and Yatin, thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.